Welcome to Small Caps, ladies and gentlemen. My name is Kerry Stevenson. Today I am speaking with Adam Schofield. He is the non-executive chairman of Heavy Minerals. ASX code is HVY. They have a garnet project over in WA, the Port Gregory project, and they've just come out with a scoping study. We're going to get into all of that today, and we're going to outline for you where they're at and why this is a very interesting story right now. Adam, great to see you. Thanks so much for your time. I know it's a busy time for you guys at the moment, scoping study out, and you only listed a year ago, so you've been very busy. Before we get into the scoping study, though, can you just give us a brief overview to our listeners who are Heavy Minerals?
Absolutely, Kerry. Thanks for having us. Very, very excited to be here. As you just mentioned, we just put out a scoping study or announced it this morning. That's 12 months in the making, possibly a bit longer if you look at pre-listing being taken into account. Heavy Minerals, so we're a industrial minerals company. We have a garnet project in West Australia that you just mentioned. It was originally ground that belonged to GMA, who are the biggest producer of garnet globally, and they produce about 30% of the world's supply. And we have IDG, who are also garnet company that's soon to be a producer to the north of us. So we're in a good neighbourhood with a garnet project that arguably makes us the third biggest garnet resource company globally. And as you mentioned, we've only been listed for 12 months, and we've managed to get a scoping study and a maiden resource developed on that project. We also have a mineral sands project in Mozambique, which is a more traditional mineral sands project, and that's very much a zircon rutile ilmenite project. In an interesting neighbourhood, we have Rio Tinto as our neighbour over there with a 3 billion tonne at 4.4% resource in country, and that's significant, and we're right next door and have a resource over there too. So in respect to resources, we have 135 million tonnes at 4% garnet at the Port Gregory project, which accounts for about 5 million tonnes of garnet and about 400,000 tonnes of ilmenite above that. And in Mozambique, we have 90 million tonnes at 3% as a resource over there, and that's a combination of ilmenite, zircon, and rutile. So very interesting projects. They're at scale where we have very good addresses in respect to neurology and our next door neighbours, and we have resources across both our projects. So we're a very tightly held company, just over 15 million shares on issue currently, and wow. As we stand today, our market cap's just over $7 million Australian, and obviously. When we get into the metrics of the project, etc., you'll realise that we are incredible value. So,
well, I do want to get into the metrics, but for those that don't know garnet's used. Really, it's sandblasting, isn't it? Is that what it's used for? Just explain to us. I want to work out that why the demand is there and why this project potentially has got some very interesting upside.
Yeah, so I mean, a brief education on garnet. It's the second strength rock behind diamond, naturally occurring. There is another one, but we won't mention that. Second strength to diamond, so it's incredibly hard, and it's effectively an abrasive when you blow it at any product you're trying to either clean or cut. So, from a sandblasting perspective, the sandblasting of steel globally is a huge industry. The total demand for garnet globally is about 1.2 million tonnes per annum, which, when you compare it to iron ore, doesn't sound like a lot, but if you consider that you're cleaning steel and cutting materials, it's a considerable amount of product. And what I just said is the other use of the product, and that's in water jet cutting. That's now used for cutting, large sections of steel, glass. It's very accurate. And again, as a massive industry, currently China dominates that particular industry, but as America becomes more industrial again, the expectation is you'll see demand out of America and Europe increasing. But the other big demand is water filtration. But garnet's used in fracking, amongst other things. There's a lot of applications outside of the main applications. But yeah, sandblasting is by far the biggest use currently, but the expectation is that water jet cutting may surpass that in the future.
Before we get into the scoping study, your project is pretty much along the coast of Western Australia, that Port Gregory. Is it fairly easy in terms of how you get to go through and mine? I guess it's more like bulk sand mining, is it? Is it fairly simple to do? Is it close to surface?
Yeah, correct. So on our project currently, the bulk of the material is actually from surface, and you're correct. It's a sand moving exercise. No different to how Iluka does the bulk of their mining. Base Resources, Kenmare, just listed a few industrial minerals companies or mineral sands companies specifically. It's a tried and tested way of mining, and the beauty about how we mine is we're effectively we're mining on the front end of our pit and we're rehabilitating on the back. So if you drive through sort of Margaret River and areas around there where Iluka has previously mined, you'd never know there'd been a mine there. So it's a great industry to be in, because we do very little, or we do no damage on the way through. Effectively, we remove a very small portion of the product. And if anything, it's really good for agriculture, because you turn the top meter of soil over, and in most cases, where Iluka has been through as an example, agriculture has improved in the areas that they've mined previously. So I'm not sure it's environmental credibility, but we're probably one of the least impactful styles of mining globally.
I think that's fantastic. Again, I want to get into the scoping study. The results have come out. Talk to us about the scoping study, and how did you, is it because of the simplicity of the project that you were able to get a mineral resource and now the scoping study out within a year of listing, or did you do a lot of work before you listed?
Yeah, it's a good question. So there was a fair bit of background work leading up to the listing. Our technical director is Greg Jones, who's quite a well-known resource geologist globally, and currently works for IHC Robbins, and IHC Robbins, through a tender process, were engaged to do the work. So leading into the study work, we had a fairly good idea of some of the metrics potentially around what we were looking for. But we kicked off the scoping study work in March, straight after announcing our maiden resource at Port Gregory, and it's taken almost 6 months to get here. And although that doesn't sound like a long time, there's been a considerable amount of work done in that timeline, including network and the physical data collection in respect to scoping work. So the teams worked very hard to get us here, and it's been a fairly intense period of time. But we're there. We're quite proud. Inside of 1 year, I don't think there's too many companies that will list and develop a resource and bring up a scoping study this quickly. But the nature of the product that we're going to be mining does make scoping work a lot easier, in that it is a bulk commodity. Not dissimilar to iron ore, for example, but different set of metrics, obviously.
Well, what are the highlights of the scoping study? Has it opened up any surprises for you? Has it given you a sort of oh wow, this is actually going to be a low capex operation, better than you thought? What are the highlights from the scoping study that you can share with us?
Look, I think our comparative and how we will be compared is possibly RDG. So RDG are a public listed company that bought the Australian Garnet project, and they would have done that about 12 months ago now. And their metrics from a capex perspective may appear to be slightly less than us, but in the published data that they've put out, those are numbers that are now 3 or 4 years old. They are on the way to construction, and there have been some announcements around additional capital being required for them. I suppose the factor that's generally considered economic from a NPV versus capex perspective is really a 2.5 to 1. And we're pretty close to that. We've been incredibly conservative in all the numbers that we've used around capital. And we think there's a lot of opportunity to improve the capital numbers as we get into a pre-feasibility study in the near term. So, from are we excited about a perspective? 110 million in capex is not a lot for bulk commodities these days. Mm-hmm. If you look at other mineral sands producers, Sheffield Resources, for example, or Image, much larger capital amounts, albeit higher MPVs. But with demand supply as it stands right now, we believe capital is not going to be too difficult to source to build a project like this, because there is a shortfall of supply globally. So we're quite comfortable that we can fill that space. But talking around some of the other metrics of the project, 253 million MPV at an 8% discount on 110 million worth of capital is a good number to have. Internal rate of returns 33%, and 4.2 year payback. So the numbers in that, nearly $500 million free cash flow for that life of mine. And additional to that, we've got the opportunity to increase that resource considerably, because it is still open to the north, south, and east currently. So, and we're going to be drilling that in the very near term and before the end of the year. So, the opportunity to increase that is genuine and real. So, we're incredibly excited about that. So we could see that MPV increase dramatically with the capital not increase at all. So lots of upside there for us.
Well, there is lots of upside. It's interesting. You just talked about how it's open to north, south. It's open everywhere, basically. How big is this project? How much have you drilled, or how much is the resource at the moment? How much bigger do you think it could get?
Difficult question, obviously, because I obviously have to be cautious about what I say. But I think there's a real prospect that we could increase that resource by about 30%. And we've certainly seen it open in enough directions to justify that. Obviously we actually physically have to do the work, but I'd say we're quietly optimistic that that's a real potential. And it could be more, and obviously it could be less, but I'd be leaning towards the more being the likely scenario based on the continuity that we've seen, specifically in that eastern portion of the resource. It's very the word I'm looking for is continuous, and the drilling hangs together very well, as does the resource. Fairly optimistic about
and
that.
I think what you said earlier was it's pretty simple, because it's from surface, and it's bulk sand mining. You know that the product's there, and it's just a matter of increasing, knowing it's there, and then doing this bulk mining operation, very similar to what you said was Iluka's operations.
Yeah, exactly. And look, simplicity is the key with mineral sands. And, effectively, you're either using a excavator truck on your front end, or dozer trap push. And there's a number of other ways that you can get the feed into your plant. And then it's a spiraling to separate your heavies out, and then processing on the back. So it's not complicated. It's been tried and tested. It's a Meccano set by all accounts. It's very straightforward. So
I love it. It's a Meccano set. So earlier you said you had just over 50 million shares on issue. That's pretty tight, and a market cap of only 7 million. Do you think the market's not quite cottoned on to what you've got? I mean, this is an audience that's keen to know what the opportunity is out there. So where do you see the opportunity with heavy minerals at the moment?
Yeah, look, good question again. From a market cap perspective, I think mineral sands in general is a difficult space to be in, because it's not well understood. Gold is something people are drawn to, for example, and they probably understand things like copper and iron ore better because of the the scale of the industry. But we're in a niche space in industrial minerals where we're very linked to GDP, construction globally, and with multiple wars around the world and lack of development and infrastructure, there's a real requirement for the products that we will be producing at some point in the future. And as it stands with this scoping study, the metrics suggest that we are likely to be able to build a mine where we are, and we know that we have a place in respect to global supply. So the biggest investors in our space traditionally are really institutional investors, pension funds, banks, etc. And the reason they're invested in our space is because it's generational. The projects, our project at 16 years mine life right now is probably a fraction of what it might be in the long term. And that's what these sort of bigger institutionals are looking for, and they're looking for dividends over long periods of time. And I'd be suggesting to any investor coming into our stock that the opportunity is, not necessarily to turn a dollar on the share price, but probably to look for dividends in the long term. And that's the opportunity. And the value add, as we've proven in the last 12 months that we're able to develop, is significant. On a fairly small capital raise at listing, where we've managed to achieve an incredible amount of value, and there's a lot more of that to come. We've got exploration planned for a project we called Red Hill, which is a discovery we made shortly after we completed our drilling at Port Gregory. And the anticipation is, that could be a project of similar scale to Port Gregory. So from a resources perspective, this is a company that should be here in 20 years' time with operating mines. So there's a lot of value to be had in that. And, part of our role as directors of the company is really to promote our story and what that means for potential investors. And it's an exciting space to be in. And, industrial minerals encompasses so many different commodities, and we see a lot of opportunity going forwards to develop other commodities in our portfolio. And obviously from a focus perspective, we're very keen to turn Port Gregory into an operating mine. And then we have our Mozambican projects, which, by all accounts could be an operating mine. And as I said, lots of other industrial minerals. So I suppose the vision for the company in the long term is to be a global player in the space. And, I personally would like to see this, an Iluka by comparison in 15 years' time. But I think there's a pathway to genuinely taking us in that direction.
And what is that pathway, Adam? When you say pathway to take you into that direction, what's the pathway? What's next? You've got the scoping study out. Where to now? What's the news flow looking like?
Yeah, so look, in the interim, it's developing this story into a resource. When I say into a resource, and taking it to a stage where we can actually develop it, but also increasing the resource base in our exploration projects. So the value add from a total underlying value perspective should increase dramatically in the next 12 months based on the exploration programs that we have. And those are already announced and in the market. If they deliver, the resource base will increase considerably. So there's an underlying value change in that. And then from a pathway perspective, in the long term, it's really looking for those opportunities in the industrial mineral space. And, we've been very good at finding assets that haven't necessarily cost us a lot to bring in, but we've been able to add significant amounts of value in a very short period of time. And that's really the MO here is, what's the biggest bang for buck that we can get whilst delivering solid work around the viability of these projects. And I think we've demonstrated our ability to do that.
Well, now with the scoping study out, are you able to give us a timeline of when you think you might, because you're going towards development and production? What are we looking at? Are we talking 2 years, 4 years? What are we looking at? I'm looking for dividends, Adam.
Look, I think the reality is with everything going well, and there's no reason to doubt that everything shouldn't go well, the reality is that we could be looking at potentially first turn of shovel by end of 2025. So we're talking inside of 36 months, or approximately 36 months to potentially have an operation up and running. There's so many things that can dictate whether that happens or not. And we're obviously acutely aware of that, but that would be a scenario that it is a scenario I'm comfortable saying we have the potential to achieve.
We've focused a bit during this conversation, and we're running out of time on Port Gregory and here in Australia. But you did mention at the start Mozambique, two very different areas of the world. What's the attraction with Mozambique, and where are you at with that?
Well, I quote Greg Jones, who's our technical director, stating that we were an elephant country many years ago when we first drilled that project, and a lot of big projects on the east coast of Africa. Kenmare has a project over there that has somewhere in the region of 100 years worth of mine life. Yeah, exactly. And again, the reason pension funds and banks are interested in the space that we're in. So, the scale is the initial attraction, but there is also generally a very good assemblage of minerals in those east coast projects. And Mozambique has a history of successful operations in Kenmare specifically. So Kenmare is listed on the London Stock Exchange. They had a few issues getting started over there, mostly related to power, and they sort of kicked off the mid-2000s and are now a very successful operation with the Omani Sovereign Wealth Fund being one of their biggest shareholders. So, that East Coast really is one of the best areas for these projects. And you couldn't buy a project like we have in Mozambique very easily these days. And from a value perspective, you'd be paying a considerable amount for it. And again, we've brought the project in from grassroots and taken it through to a resource which we intend to increase considerably. So there's a lot of value in those projects, and as those East Coast projects are coming to development, it's looking like Rio Tinto is going to develop its project in country. There's a project in country called Shibutu, which is owned by the Chinese. They're looking at developing a port right now to sustain that. So there's a lot happening in our neighbourhood over there. So, and the scale is the potential scale is massive, and we're looking at potentially increasing our resource over there by 5 or 6 times in the near term.
In the near term, so are you currently drilling over there?
We're planning an auger program to bring up an exploration target, and based on that program, we'll look at what we do in respect to air core in the near term. But all the signs that we're seeing in surface mapping and historical auger work that's been done by others suggests that the resource has the ability to do that. Yeah. All
right. Well, we're running out of time, but before we do, I just want to. Is it too early to ask you about offtake agreements? Are people starting to talk to you about offtake, even though it's a few years away?
Oh, well, I can tell you, people have been talking to us about offtake long before we listed. So, and just to quantify that, with the Mozambican projects, there's a number of global pigment producers that have expressed interest in offtake. We've got a very good quality ilmenite product. So that there's some real potential there. And again, demand suggests that we'll be able to place product quite easily. In respect to the garnet, again, we've had conversations pre-listing, but we've certainly spoken to a number of people in the garnet space, and from a forecast perspective, there's somewhere in the region of 500,000 tonnes of shortfall by 2030. That really starts becoming incremental from 2025, we know there's a place for us, so we're probably not too concerned with offtake. But as we go through the process of pre-feasibility study work, we're going to have to lock those in, and we're anticipating doing that in the near term. So,
well, I congratulate you, because with 50 million shares on offer, it's clear that you've been a very good custodian of shareholder funds. You've got 2 great projects there. Adam, wrap it up if you wouldn't mind for me. Everyone knows I like to finish up with 3 reasons people should be sitting up and taking notice of heavy minerals. Not so heavy, ladies and gentlemen. Heavy minerals right now, ASX code HVY.
So first thing would be to say that we're very tightly held. We don't have a lot of stock in issue, and from a value perspective, that obviously has huge upside for anybody participating in our shares. From a projects perspective, we've got 2 globally significant projects. that have had significant value added in the near term and will have considerably more value added along the way. And specifically in the garnet space, we're one of 3 garnet producers, or will be producers, hopefully, in West Australia, and that puts us in a global position going forward. So lots of value to be had.
Well, the economics are stacking up there with the scoping study. There'll be lots more news flow coming up, so make sure you come back and have another chat with us. But there you have it, ladies and gentlemen. Garnets. Oh, before I go, ilmenite. What's ilmenite used for?
Predominantly the manufacture of paint, and it's the white that you see in the paint behind me.
Oh, there you go.
Used to be lead, Kerry, and now it's ilmenite. But it's also used in the production of titanium metal. So, from an aerospace and military perspective, that's the other major application. So
the demand is there. They've got the resource scoping study out, mineral resource out, lots going on. Congratulations, 1 year listed, and boy, they have not let the garnets grow under their feet, ladies and gentlemen. So go check them out. ASX code, as I said before, HVY. For now, Adam, thanks for joining me on Small Caps.
Thank you, Kerry.